The federal deficit ballooning to just about $1.1 trillion in the first 4 months of the fiscal year, an increase of about 25%, military and healthcare spending surging. But one big source of revenue, corporate taxes, those surged by 27% between October and January. Now, President Trump aims to narrow the deficit slightly and extend corporate tax cuts, but his budget's unlikely to pass the House. Does the deficit, this is going to generate a lot of buzz, I know, because people are out of their minds on this. Does it matter to the markets?
No.
But it should.
It should.
But it doesn't.
It doesn't. Right? I mean, look, we have trillion-dollar deficits as far as the eye can see. And we have a Federal Reserve who's told us our job is to keep interest rates low and goose inflation and keep the economy going. So, it's a marriage made in heaven. They have to buy assets. The Treasury wants to borrow money. But, if you play this out over a decade, you come to some weird places like, is it turned into modern monetary theory? Right? Are we essentially, because when the U.S. faces its next downturn, there's no real ammunition left to cut in interest rates. So if they're going to turn to the fiscal side, and then the fiscal side is going to say we got to sell the bonds, and I think the Fed's going to buy them.
Right, I would agree. I think in the short term, it's not a major market concern, but in the long term, it could be. And what would change the picture is if we saw, a dampened economic outlook, if we saw less foreign interest in U.S. securities, that would really make it more of an immediate term concern. But we don't see a catalyst for that right now. So all that taken together, it's not something that's keeping us up at night in the immediate term.
And listen, I don't want to make too much of it because, this is fast money and bonds are slow money. But we had the worst, or the lowest yield, I shouldn't say worst, the lowest yield 30-year bond auction
in history.
Ever today.
Yeah. Amazing.
Why?
Really?
What does that tell you?
Well, the first thing it's telling you is that there's a lot of haven money coming into the market, and there's a lot of liquidity from central banks. And to use the expression Rick Reeder used today when I was with him and he's right, we're running out of bonds to buy. There's so much demand for fixed income that there just isn't enough fixed income securities to fill the demand.
Yeah, and 14 trillion in negative yielding securities out there as well. So it's interesting because the euro's down almost 3% in the last 20 sessions. So you're getting some trades, you're getting some risk-off trades in the middle of this risk-on. But I think we're all basically saying that the U.S. is a flight to quality, wherever you want to call it. And maybe it's for a pension fund or someone who's got their actuarial responsibilities. But ultimately, the U.S. dollar is getting up near 3-year highs. So, there are some things that are telling you either people are getting concerned about risk and it's not just a yield down environment.
One thing, too, is, Tim, if you want a positive return on your debt investment, the United States is pretty much the only place left to go.
Yep.
So,
but does that mean that people are buying things they shouldn't be buying?
Oh, absolutely. Right?
People are buying. I could sell debt. And somebody would buy it.
Yeah, probably.
We could securitize you.
You're a handsome man, though. I'd buy your debt. I'm just saying.
I saw a new private debt fund the other day, and the advertisement was you can get a 12 to 15% yield on private debt because they lend to companies with negative cash flow or in some cases no revenue at all.
Speaking of that, quickly, are you buying oil and gas debt?
No.
So you just said everybody's buying everything, but you won't buy oil and gas?
No, me.
You
asked me.
Okay.
I'm not buying. No, E&P right now is off limits for us. I'm looking at midstream, whether we should just blackline it.
Pipeline, fancy word for pipeline.
Right, but the majors they'll survive this. But when you look at the number of companies in the energy patch that have negative cash flows, and you consider the risk we have to the price of oil. If this coronavirus things gets worse, Brian, I think you said that you could see demand for oil fall by 2 million barrels a day. We're already overproducing by 1 million barrels a day. So, I don't see what's going to hold up energy prices.
Well, maybe nothing. We're going to find out. OPEC and Russia, maybe, fingers crossed.